Hi there, I'm Ross Woodfield. Welcome to Blackwell Global's daily market update. Starting off with the US dollar, and it continued its bearish run with another day in the red. The ADP non-farm result was released and missed forecasts of 200k, coming in at 169k. The result is a precursor to the official figures, which are due on Friday, and will no doubt lower the market's expectations. Federal Reserve Chairwoman Janet Yellen also spoke yesterday, and she said equity values were high, which leads us to speculate that she may be trying to soften the blow from an interest rate rise. A rise in June looks unlikely, but we believe the Fed will push ahead with a rise in September. Moving on now to the pound, and it had a solid day, closing over the 152 mark against the US dollar. UK Services PMI, which represents 80% of the UK economy, lifted from 58.5 to 59.5, and a sign that the UK economy is still ticking along nicely. Watch for the UK general election later on tonight, and which is looking like resulting in a hung parliament. The pound could find some weakness if the Conservatives fail to gain enough support to form a government. And taking a look at oil now, and it spiked higher on the chart, but met some solid resistance and was beaten back down. The Energy Information Agency released their figures, which showed crude inventories fell by 3.9 million barrels last week. The bulls rejoiced and pushed oil as high as $62.56 a barrel, but the euphoria was short-lived. Iran released a statement, and they said they would be ready to export oil just 10 days after sanctions were lifted. They also said that production would rise to 3.8 million barrels per day in just 6 months. The bears did not take long to push oil back down towards the $60 mark. And that's all we have time for today. For Blackwell Global, I'm Ross Woodfield. Thanks for watching.